I'm going to expose the whole cryptocurrency scene and bring you guys in on something nobody has been speaking about. No crypto influencer wants to tell you the secret inside information on this exit liquidity stuff. We see people say, oh, you're going to be exit liquidity. These people buy the top retail. Nobody understands nothing yet. I'm going to expose it all. Okay, my name's Tyrell, and I'll get into my story later on and go into the actual details of how I managed to go from $20,000 a month business owner to a multi-millionaire using this one specific strategy. And I want to share it with you. But first, I want to explain to you about how crypto works and how this market is going to make millionaires, but most people are not going to keep it. In fact, they're going to lose all of their money and even the money that they came in with. Some people will be like, right, they've invested $40,000 now, they make $500,000, $1 million, and they leave with zero. So they've actually lost $40,000 that they came in with, right? You probably heard the horror stories from a friend or so who, before they were making all this money, they went dead quiet for the past 2 years, and all of a sudden they're back now, and it's all great. It's not, right? It's not. Okay, so the way crypto works is obviously you have your BTC, you have your Ethereum, you have your large market cap coins, you have your altcoins, and the money flows from Bitcoin all the way across, right? I made a few videos about this in the past. BTC is usually the outlier, it's the leader, and most people who actually have high net worths have most of their money in Bitcoin. So once that thing starts rallying, they look for things that are more risk averse. They look for things where they can take their profits, not new money, but their profits, and they can deploy it into other coins that are more riskier to go back and accumulate more Bitcoin and more Ethereum, right? A different mindset to most people that get into crypto, buy some Shiba, buy some Bonk, buy random coins online, right? And expect influencers to be their financial advisors, right? What ends up happening is, because so many people that have a lot of money move their money into these smaller coins, all of these smaller coins pump, and along with it come all of the smaller fish, right, which have been there, which you have a few $1,000s of some coin and it does a 10x, right? They drag all of these people with them, and eventually most people start trading leverage. They become over leveraged on the market. Then you see all the volatility, then you see loads of overvaluated projects. The bubble eventually grows too much and it bursts. Every single cycle, there's no such thing as a super cycle. Those things don't really exist. It's always programmed in a 4-year cycle, and I explained all of that in this course, which you can look at after this video. I'll go through everything. It's like 5 hours long. Okay, now you understand about the basics. When these projects launch, when you have Ethereum, when you have XRP, Solana, right, even the larger projects that you see, they need money to raise, to develop, to hire staff, to have technology, to do all of these things. It requires initial capital that they can't get just from launching the coin. So what they do is they look for VCs, venture capitalists and angel investors to take the risk, invest in their project early, give them cash money, and in exchange they give them this token which could perform well or it can't. 99% of these things fail, but some of them become massive. In fact, according to CryptoRank, Ethereum had an early round. In fact, they had strategic rounds and private rounds, and the returns are significant. We're talking at current prices, a 1,140x return at a price of 0.31. That's 30 cents per Ethereum at that round. And they raised $18 million from companies like A16Z, Pantera, Multicoin, Galaxy, Delphi Digital, Paradigm, LD Capital, and Hash Fund, right? And many others. So these guys, whether they invested $1, more than likely they invested $5,000, $10,000, $100,000, maybe $1 million into this project, and they received over a 1,000,000% return. Ridiculous, absolutely ridiculous. And these people are what most people call the whales, or they would say, we're the exit liquidity getting into the market. But as you can see, right, most of the time these VCs, they don't necessarily sell. They have long-term visions for the projects that they invest into. The same can be said for Solana, for XRP, and for most other projects. In fact, this isn't my saying, right? This is public data. You can check this out on CryptoRank, and you can look at all the different projects and all the different private rounds that they had. Now, normally, these private investments are things which the normal people can't get access to. However, with the rise of projects like Commonwealth or Paid Network or Interstellar DAO, you can now start investing into these projects without having to be a VC or early investor. However, what most people don't realize is it requires a lot of risk, and there's a certain strategy that you need to approach with it. In fact, when I first started with this, I was only making a few grand a month. I was doing YouTube, influencing for e-commerce brands and different things. I got a deal from ShopX, and ShopX was like, look, we want to work with you guys. We'll give you an early round investment into our project. I invested $3,000 and I received over $600,000 at the peak. It's absolutely ridiculous. The project did over a 200x. It was about a 300x at all-time high. Crazy, right? Now there's things in there like vesting, cliffs, tokenomics, and many, many more, liquidity, so many different things and terminology, which I'm going to explain shortly, okay? But put very simply, if you have the access to get into these types of projects and early rounds, you can see crazy returns, ridiculous returns, not according to me, according to CryptoRank and according to public information out there from early rounds and early venture capital rounds that you're getting into. You might have seen things like Dragon's Den or Shark Tank, where you see Kevin O'Leary sit down and do a deal, a multi-million-dollar deal, where they get in and they go through all the finances, they go through the valuation, and eventually the things end up becoming like Ring Doorbell and doing multi-million-dollar exits. You see, these things are real. Most people can't get into them, but today I'm going to explain the key things you need to know and exactly how you can get in. So hopefully that convinced you on the opportunity, what it is, and a few different ways of how you can get in there and how other people got in, right? But now I want to just break down the terminology for you. So get your pen and paper, soak up some information. Number one, most of these deals are usually called private sales. Now what a private sale is when a project needs to raise money, they're looking for capital, and they're looking for you to get in at different rounds. There can be angel rounds, friends and family rounds, seed rounds, private rounds, public rounds. These are just different rounds when startups tend to raise money. You can learn more about this stuff by just Googling or looking up startup investing, right? Or watch a few episodes of Shark Tank, right? You'll get it after about 30 minutes. And when you learn this, you can apply this directly to crypto investing, because the difference between a startup that's brick and mortar and the difference between a crypto investment is you tend to get tokens instead of getting equity. And with your tokens, they're able to sell faster. You can sell these tokens instantly according to whatever vesting period they have. Whereas with an equity deal, you have to wait for somebody to buy you out of your equity, for them to get listed, for them to sell. And sometimes equity deals can take years for you to be able to reap the rewards. And sometimes you need to be an accredited investor to get involved. However, with crypto, when they list on an IDO platform, when the project goes public, you see it on a launch pad, for example, like Paid Network or PokerStarter, usually you can get a percentage of your investment on day one. That is according to what is called a vesting schedule. Now, a vesting schedule is the agreement in which a project agrees to give you your tokens. So let's take Nakamoto Games, for example. If you check out CryptoRank, you go to the vesting terminology, you can see that Nakamoto Games, they have a private round, a team round, they have a percentage for operations, a percentage for play to earn, a percentage for private round 2, player sponsorship, and also their seed round as well. Then they have a vesting schedule. And again, you can actually just scroll over these and you can see what they mean, okay? You can see initially they have something what's called a TGE unlock, which is their day one. Guys, please don't let this go over your head. Imagine if I was going to say to you, look, I'm going to give you $1 million to learn this thing. That's how important this information is. You would learn it if somebody gave you $1 million. You would figure out vesting, TGE, all these different terminologies. You would figure it out. So figure it out, okay? And just take notes. Watch this video like 5 times if you have to, okay? So Nakamoto Games, their vesting schedule, for example, theirs was 10% at TGE for private round 1, 2, seed round, angel round, 50% at public, right? And 50% on their IDO. Okay, so if you was in a private round, for example, you would have had 10% at launch, but if you was in a public round, you'd have 50. And the question you're going to ask me is, why wouldn't I just be in public round? Why would I be in private round? Well, the advantages of being in private round is you actually get a cheaper price, a much cheaper price than you would get on the IDO. And sometimes these prices are never seen again. In fact, Nakamoto Games, the only time we touched that private price was actually deep in the bear market. But for most of its life, it's been way above its private round price. And its seed round price, I don't think we ever even touched it, okay? And you can see the prices as well as the returns on the fundraising section. In fact, if you see here, you can see that the IDO price was 0.18 cents. The private price was 0.16 cents, right? So you had a massive discount, and you'd be 15x if you was in that private, but you'd only be up 14x if you was in an IDO. Now the difference isn't that bad, right? And that's why I always say to people, look, get in on some of these IDO platforms. You guys have probably seen my videos talking about Paid Network, PokerStarter, Aether Games, and why there's such an advantage of getting on an IDO platform. However, getting in at private round price is, first of all, way cheaper, and also it allows you to get in way earlier with more money, right? Because unless you get in on a paid network and they have an open pool, if you guys didn't know, Paid Network, you don't need any money, you don't need to hold any tokens to get involved. You can just get in on the open pool and you can invest, you know, anything in that amount, right? But most of the time, if you look at PokerStarter, Paid Network early rounds, and Gamify or even Bull Perks, these other IDO platforms, those ones you can only get $100, $200 in these IDO rounds because they're just so lucrative, right? Whereas if you're using that private, you could have had $5,000, $10,000, $20,000 in these things and be seeing, you know, potentially 37x returns. In fact, other groups like Interstellar DAO were in at these prices too. In fact, Interstellar DAO invested over $250,000 into Nakamoto Games at private round price. So you can see just how much better it is sometimes to be in that private round because you can just have more money in our early round, right? So that's a realistic example about private sales, IDO launch pads, the different rounds, the different terminologies and stuff like that. And hopefully guys, that explains it a little bit. If you have any questions, let me know. But I want to just quickly share with you the risks about being associated with private sales and early stage investments. In fact, if you've ever read a book called The Psychology of Money, it's an amazing finance book, one of the best sellers out there. I recommend you read it. They sit down and they interview some venture capitalists and they say to them, look, what's the risks? We know the rewards. You can make 10x, 50x, 100x, 1,000,000% returns on projects. Great. But what are the risks associated with it? And they said this: of every 100 projects that they invest into, 50 of them fail, whether that is the CEO rugging the project, whether that is the project never comes into fruition, they get scammed, the market is at the worst time. 50% of those ones fail. 25% of those projects do about break even, and the other 25% of the projects do a little bit of profit, but 1 to 5% of that whole portfolio, you see 10x, 50x, 100x returns, and that covers all the other projects. Now the thing is this, I will always say that most people, especially me when I first got into this thing, I just completely disregarded the first part. I disregarded the part about 50% of projects fail. I disregarded the part about most of them break even. And I just completely looked towards, okay, if I put 10 grand in this thing, it could do 100x, it could make $1 million lit. And I'll just put all my money that I had for the month in these projects. And yes, some of them did okay, but most of them failed. And eventually it became this thing where I didn't realize that it's more of a volume game than it is a nitty-gritty wait for one project game. You know, it's better to play the game of volume than to play the potluck game, right? And that's the way I treat it with private sales. You see, with private sales, the best strategy that I've personally done is I've looked at how much money I make, I've looked at my whole portfolio, I've looked at my risk tolerance. Okay, am I somebody that is willing to be invested into something for 5 years? Am I someone that, you know, has the conviction in my investments to stick with them? Do I have enough cash flow? Am I risk averse? Am I okay with losing this money? I have to go through these things with myself. And when I did, That's when I decided that, you know what, private sales is for me. I'm okay with losing 50%, right? My track record is a lot higher than that. You guys see it from my YouTube channel. Things like Myriad Games, Nakamoto Games, Dreams Quest. These things, as an angel investor for me, have been amazing, okay? But for most people, they don't have a lot of success in this, right? And initially, you know, I didn't have a lot of success. I still have, like, I would say 20% of the projects that I invest into fail. But it's okay, because the other 80% is like break even. Maybe they take a few years to come out. Like Devi, for example, is up 5x, but it took me 2 years. I had to wait on that investment for 2 years. Myriad Games, I had to wait on a whole year for my investment before I even seen 1 penny of return. Like, these are the types of things that you have to be thinking. Okay, so for you, you have to ask yourself the question: is this the right fit for me? Right? Because for me, I don't really like trading too much. Right? If I trade, I can get liquidated and lose my money. In fact, there's probably more than a 50% chance that I'm going to get liquidated eventually. Whether that is now, whether that is when I trade and make loads of money, whether that is when I take profit, put money back in, lose a trade, go back in. You know, it's very, very risky. And to me, it feels like I'm chasing money. Whereas when private sales come around, it's kind of like I'm putting that money on hold. And then obviously sometimes they launch, I make all my money back on day one. And you know, sometimes they launch and I make like a 5 or 10x on day one. You know, but I have to be willing to wait a few years for these things. But for me, it's better. For you, you have to ask yourself that. Now, I want to share with you some ways in which you can get access to these private sales if you do feel like this is the right fit for you. There's many different ways. You can get in on IDO platforms, right? Like Paid Network, PokerStarter, Ape Terminal, Commonwealth, right? There's so many different ways to get access to these types of investments. Now, there will be different rounds. You have to do due diligence. You have to look at how many tokens do you need, maybe what different rounds, maybe how much are you able to invest for each one. For example, PokerStarter is pretty good. They have like 500k raises, for example, but other ones might be different. They might only give you like $100,000 raise or $200,000 raise. You can only invest like $100 or something. Okay, it's completely up to you. Paid Network, open pool. They have a completely open pool. You don't need none of their token, and you can still get in and accumulate like more than a $5,000 investment into a public round. But you don't really get private and seed round investments or angel round investments. Or there's other ways. For example, you could join a private group, right? You can join DAOs, for example. There is Interstellar DAO, which you can learn more about by checking out my Telegram link down below. You can also learn about Moon Boots DAO. These guys also allow you to invest into early stage projects. And there are many other DAOs and early stage things and early stage groups to get into. These groups are usually gated. For example, Interstellar DAO is very simple. You purchase an NFT, you can either pay $5,000 or $369. That NFT is resellable, so it's basically an investment. And when you join the group, you get access to invest into private rounds, seed rounds, and also public rounds at any time. In fact, some of the best investments we've seen so far is the same ones that I got into. Our angel round is Nakamoto Games, Dreams Quest, Myriad Games, and many, many more. In fact, most recently we've seen Devi launch, and that did a 5x as well. So the performance for these early groups are good. The only thing is you want to make sure that the owners of these groups are KYC'd. You know exactly who they are. Also, you can do your due diligence that they are connected directly with the team. I've seen before that people join these Telegram groups and all they're doing is they're arbitraging and reselling allocations to other people. And usually those groups are cheaper. You join a group, you know, it's a cheap entry fee. You can get in and people are like, yeah, great, they've got this opportunity. They don't realize they're paying 10 times more on fees than other groups because they're arbitraging. And also most of those groups rug pull and just take all your money anyway. So that's why I'd always say, if you're going to get into private sales, look at your public IDO platforms, your launch pads. Look at some of your private groups like Bullrun, for example, Interstellar DAO or Moonboots DAO to start getting involved. And it's not complicated. In fact, if you're interested in private sales and you learned something new, just watch this video back, take notes, and just go into more depth and go down the rabbit hole on some of these investments. So guys, that video should explain to you everything you need to know about private sales, the opportunity of private sales, the different ways, how you can do due diligence on private sales, learn more about the deals, and just how lucrative they can be. If you have any questions about it, Let me know. I want to answer all of your questions, provide as much value as possible. I don't mind responding to every single comment, responding in Telegram, whatever. And if you want to reach out to me, just join the Telegram link down below. Peace.